Can you guys hear me? Awesome. How's everybody doing tonight?
Great.
Good, good. Everyone's doing good. All right. So, pretty much, I'm gonna start off with two things first. We're gonna be talking about due diligence, more so from a fundamental approach. I have a saying: uh, fundamentals is why, and technical is how. Right. So, a lot of information gets, put out to the public, and there is a show called Billions, right? And he says a quote. He has a quote that he says, "We all have access. We all have access to the information. We just analyze it differently, right?" So, with that being said, there is no correct way of performing due diligence, and there's no wrong way of doing due diligence. I like to, lean on the fact that everyone should have a plan. So before you start to invest in any company, you should have some type of idea of what it is that you're looking to get from, that investment. You should have an entry, you should have an exit, you should have, if all hell breaks loose, you should have, some type of golden parachute, where you don't lose your shirt and you can live to fight another day. Think of the stock market as the arena, and you're a gladiator and you gotta stay alive, right? So there's no wrong way to performing due diligence at all. Like I said, have a plan, and it's all based on what you want. Because there's tons and tons and tons of information out there. So today, what I'm trying to do, I'm gonna try to break it down and be a lot more interactive instead of like a show and tell type situation. I want to open it up for questions and just like ideas of how you guys could go about procuring that information. How do you get the information? And then once we get the information, then it's up to you guys how you guys gonna analyze it, and what do you guys plan on doing with it. So everyone knows what's going on in the world right now. We got the Russia-Ukraine situation. We have the job situation here. The president just gave the State of the Union address. Everyone, it's so many different things. Everything's up in the air, and we're all as traders trying to figure out, okay, with all this going on right now, how could we, benefit off the situation, or what does that situation means to me directly? And that is a question I can't answer. That is a question for you to answer, and how you go about it, because my risk tolerance may be different from yours. My investment objectives might be different from yours, and so on and so forth. And, like I said, it's a lot of information out there. It's just what does that information means to you, and how you're going to, get the information. So we're going to start from the basics. I'm gonna try to share my screen here, and there we go. You guys can see my screen, right?
Yes.
Awesome. So I'm gonna start with the basic, pretty much. So there's a few things you want to do when hey, somebody tell you about a stock, and you have no idea what the stock does, and that happens a lot, especially as new traders coming out. We might, hey, this stock is on a run, this stock is moving, and they might just give you the ticker, right? And then once you have the ticker, it's up to you to find out whatever it is. Because when people are making recommendations and people are telling you about stocks, 9 times out of 10 is because of some past event, whether the stock is already on a run, ran already, whether the stock is rebounding, where it is at its highs or lows, whatever the case may be. And then you're going to get that stock. And then the first thing you're going to do, you're going to hop on, fake, good old faithful Yahoo Finance, and you're gonna put in the ticker. So because this is a hands-on situation, somebody give me a stock, any stock, it doesn't matter. Give me a ticker.
Apple. AAPL.
All right, so we're going with Apple. Okay, so somebody tell me, hey, guy, this is Apple. Apple is an awesome company. It's been running, blah, 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 blah. I don't know nothing about Apple, so this is what I'm going to do. This is, like I said, I'm coming from the fundamental side, and pretty much I'm going to show you a way where you can kind of get familiar with the company like really quickly. Um, get familiar with the company. What does the company do? How does the company fare in this particular market? You're gonna figure out who the management of the company is. You're gonna try to figure out what business it's in, how do they operate the business, what are the future plans for their business. You're gonna find out like contracts. You're gonna find out sales, and then also the infamous financial data and how do we go about getting it right. So first thing you do, you probably popped on, you probably hop on, Yahoo Finance, put in a ticker, this thing pop up. And then when this thing pop up, you get to see all this information right here. And then as a trader, as somebody who's new to it, who's just getting put onto this particular company, you want to make sense of what all these things are, right? And you want to make light of it to say, okay, well, let me take a look at it. A lot of people who are entering this investing world and stuff like that, they've been taught on a technical basis or technical, foundation where it's just look at the price and then just look at price action movement. And then the first thing they'll do, they'll pop up the chart, they'll go to the chart and they'll look at the chart and they say, well, okay, it's a formation, but it's in a channel and so on and so forth. That part is cool. It's okay. You could start there if you're gonna trade it. Day trade it. But like I said, I fall back to some of my key elements. Fundamental is why, technical is how. So let's make some light out of this company, right? So Yahoo is a good tool. Google's a good tool. StockTwits, any of the company that provides these quotations, what they call the quotes right here, which is pretty much the latest price and whatnot. And then we start seeing these things right here, which is the quote exactly. So the quote is the previous close price, the open price, the bid price, the ask price. The bid is pretty much the most someone's willing to pay for it. The ask is what someone is, the least they're willing to sell it for. The 52 day range, the days range is pretty much the price movement, what it has been. The lowest is it has been to the highest has been within that day, 52 weeks. It pretty much means within a year. This is the run where it has been. It gives you the volume. The volume means how many shares transacted. That's buys and sells together. It also gives you the average volume. That's the same thing. It's the how many shares, the average buys and sells that has been registered and recorded. The market capitalization is a $2.6 trillion company. The market cap pretty much means all the stock that ever been sold. Well, if you look at the share value of the company, this is where you get the market cap, which just means how much money has the company raised through the beginning of this company since the company began to trade. You got the beta numbers right there. You got the PE ratios. You have the earnings per share. I'm going to go over some of these numbers in a little bit so you guys get an understanding of the different types of valuation of a company and how does one value a company outside of what is displayed here. You have the earning dates. You have the forward dividends and yields, which pretty much tells you what the dividends are. Then over here, you have like a 1 year target estimate from some analyst. Don't ask me who the analyst is. I don't know. But this is where you start off. This is pretty much the basics, right? So somebody, like I said, somebody just told me Apple. Don't know nothing about Apple. I just came here. So this is the first information that I see, right? And I'm just using Yahoo as an example, because Yahoo is like one of the most popular. Yahoo Finance is one of the most popular platforms or uh, uh, platform that you can use, right? So you come over here and then you'll do something similar to this. You'll hit the company profile. You kind of get the name of the company. Kind of find out who the company and who they are. Um, you go through the sectors, technology, consumers, stuff like that. You come down here, it gives you a brief description of the company, what the company does, corporate governance, and so on and so forth. Um, you come up through here, you might hit the financials, and stuff. And you might see some stuff and like, okay, trailing 12 month total revenue, what the revenues are. You see cost of revenues, gross profit, and so on and so forth, right? So this is cool. This is like a nice little introduction. But if you really want to get you want to get pretty much in transit, you're gonna want to go to what I said directly, what they call the go directly to what they consider the horse's mouth. You want the information directly. So, hold on a second. How do I get rid of this little thing right here? It's the little zoom thingamajig. Okay, yeah, drag it out. There you go. Awesome. All right, so I like to go to the horse's mouth directly, and it is known as EDGAR, which is pretty much the electronic database for pretty much all reporting companies, all publicly traded companies. They have to, if you go to SEC, well, pretty much this is what you do. You just go to Google, really, and you just type in EDGAR. You go to EDGAR, hit enter, and it's only the first one. So if you look at this link, it's sec.gov/Edgar, right? I know some of you guys probably seen this before. Like I said, this is what everyone's used. This is the information that's on here. 9 times out of 10, outside of it's being DWAC, which is a digital platform that publishes the quotes and everything like that. Majority of the information actually comes from the company's filing because the company is responsible for making said information public, right? So we will go to Edgar and then we'll type in Apple and then we're gonna go right here. This is it. Click Apple and then once it pops up, we're gonna go to view filings. And then over here is where you're pretty much going to find every single thing about the company. Okay, but a better way, not so a better way, but one of the most common way to really get like a major idea of the company and the company's business and the company's operations. We'll look for certain filing types or form types, right? So some of the most common form types are 8Ks, right? And 8Ks are just a filing of any material change of the company. So any drastic contracts, change of directors, management, any type of relevant information that can have an effect on the business, the companies are required to issue the 8K form. Then there is the second comment. There is the 10Q, which is known as the quarterly report, and this is pretty much a report that's given out every quarter, every 3 months, that gives you pretty much the status of the company, how the company is running, where the company's at the time, and then after the 10K, the 10Q, you'll have what they call the 10K, which is pretty much the annual report. So we're going to just jump to what the 10K is. So if I get to this company, like I just got introduced to this company, the first thing I would do from a fundamental perspective, To learn more about the company itself is to go look at the 10K, because in the 10K is going to have some very important information. And some of the information is going to be, you know, important to your due diligence process. Like, for instance, first and foremost, what is the company? What does the company do? You can find all that stuff. What type of securities the company have? You can find all that stuff on the 10K. So one part of it is when you go down here, you can go to item number one, which is the business. It'll give you an overview of what exactly the business is, what do they do, how to make money. It's going to give you the risk factors, what is the risk of my business operations, and what risk that I am aware of at the time. Unresolved staffing, staff comments. It's going to give you properties. It's going to give you pretty much every single thing about the business itself. Okay, and the thing about annual reports is that it come out once a year, right? So if you want like an overall like general idea of the company, you'll go to the you go to the 10K, because 10K, like I said, is going to give you a broad idea of the company, what the company's doing, what its future plans are, the management. This is very important. The short word for this is the MD&A, which is pretty much where to come. This is directly from the management of the company. They're going to tell you exactly where the company is, what the company's been doing, how has it been doing it, and what some of the effects of that the company is currently operating now. So this right here, this 10K is a very well put together 10K. Some companies may not be as elaborate as this is. But most companies in a 10K would give you, like I said, that overall kind of 30,000 feet kind of view of what the company does. So let's just jump into this real quick. So I don't know anything about Apple. I come down here. First thing they say is a little bit about the company, what the company does. It designs and manufactures and markets smartphones, personal computers, tablets, wearables, accessories, and sells variety of related services. The company for years. And then it goes down into the product. This is the product right here. This is they got the iPhone, they got the Mac, they got the iPad, they got the wearables and home accessories, the services that they have. Boom, it tells you, right? And this is something you guys gotta get familiar with, especially with new companies or even a company that you're already familiar with. Like, how does this company makes money? What is the core base of the companies? Like I said, looking at the charts first, that is cool and all, but like I said, you gotta have some type of plan, some type of idea of the company and what the company does and what it needs to be, right? So boom, you can figure out what it is. Boom, it comes down here. It tells you what the competitions are. It kind of gives you like a market kind of overview of the market. And one thing about these 10Ks is very like what's the word I'm looking for? It's comprehensive. And a cool thing about the 10K is if you're able to identify competitors in that field, you can also use the 10Ks and kind of put them, side by side and start to compare to kind of, for your personal, situation, figure out whether this company is actually worth my investment or not by kind of having one of their competitors to compare to, and you get all that through the 10K. And sometimes you might figure out that the company that you might be interested in may have some type of market edge on the versus the competitors, because some things in your business plan the other competitors may not be in, or that segment of that business the competitors may not be particularly participating in that sector. Like Apple, they got the wearables and they got the ad situations and all the different services that goes along with their product. So here they go. Like I said, they break down pretty much everything. Supplies, components. They tell you where it's coming from, where it's coming from. business seasonality and product introduction, and it just it goes on and on and on and on and on. Now, like I said, there's a lot of information in this 10K. And I'm not going to go through this entire 10K with you guys. But the point is, like I said, I'm going to show you guys, kind of give you guys an idea of where to go to get the information and what you do with that information. That's up to you, and what that information means to you, and how you can actually take, you know, you know, take control of it, or take actions on it, right? So this is the 10K, right? So this is cool. Like I said, it gives you all that information. We can go back and, like I said, the 10K is like the overall view of the company. If you want to get a little bit more in like up to date information, a little bit more hands on, you go to what they call the 10Q, which is the quarterly report. The quarterly report is more so like, hey, what's the current state of the company? And it normally starts over the financial statements. The financial statements is a good way to kind of give the financial status of the company. Is the company cash flowing? Is the company in debt? How's the company faring? And so on and so forth, right? So financial statements are another way, one of the pillars of your due diligence, and whether this company is worth your investments or not. Um, After, you know, you get introduced to the company, you go in, you figure out what the company business model is. It also gives you an idea of the strengths and the weakness of the companies, and all the risks associated with the companies. Then you want to go see what the financial um, status of the company is. What's the financial heartbeat of the company? So you go to the balance sheet. Now, balance sheets, they're great. They're awesome. If depending on what type of valuations you're looking for, aka the enterprise value, aka the fair market value, aka how much what is this company worth, right? So there's predominantly like three ways, um, well, three categories per se, that one is going to evaluate a company. There is what they call the a value model, which is pretty much the cash flow of the company, dividends of the company, or something that they use a lot fundamentally. One of Warren's Buffett key element, which is called the discounted cash flow uh, 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 value, where it looks at, hey, what type of cash is coming in, how much cash is available to the company, and how the company is willing to use that, deploy those cash. Another one is with the dividends. If this company is paying out dividends, how well this company has been paying out dividends, because the difference is, when it comes to a value model, right? The difference is that a company with discounted cash flow, right, it's more so how rich the company is. When a company starts paying dividends, on the other hand, that is, how much money does the investor actually get out of that money, right? So under the value model, you could go look and you can see the dividend yields, how much dividends have been paying, what's the percentage of the cash that's on hand, versus how much cash they're giving out to shareholders. That's another way of doing it. Then there is a different model called an asset model, and pretty much what the asset model is not really the book value, because even on a situation like, let's say, Apple and whatnot, right? So they have, let's see, they have cost of goods sales, market research, coming out here. They have liabilities, they have properties and stuff like that. And even though, like, let's just look at this, right? So let's say property, plant, and equipment net, right? So boom. If we was to try, based on um, the asset model, right, which is how you get the one of the three models of trying to get the fair market value, the enterprise value of the company, right? If you was to look at, just for instance, that one, get this one particular line, right? Which is the value of the property, plant, and all the equipment that Apple owns, right? So over here, they might say, hey, this is, X amount of dollars, but in reality, tax purposes and so many different purposes, they might actually be depreciating that asset. So you may not actually get the real value of the company, even though it is a book value, the asset value may not really be real because not real, but it may not be accounted for because they are depreciating that value. So when it comes to like asset based models and those type of situation, you want to use that stuff based on companies that has like like retail companies and energy companies and stuff like that, where a lot of your assets and things of that nature, like the iPhones and your product, like they're a major retail giant, right? So the assets and the research and the intellectual property and all these different type of things, you can derive a value from that. It takes just as much work as trying to figure out what the value models is. The same thing, but like I said, it all depends on you and what information means for you. Another model in this is called the multiple models, and the multiple models is what most of us actually know about, which is something uh, which is, let me see if I can pull it up, which is these models right here. Right, so which is these models right here, right? Which is the ratios, right? Which is there's multiple models, right? So the PE ratio is price per earning ratio. So if you look at the earnings versus the price, that's what that is. It's normally at a multiple. So this PE ratio means the price that you're paying based on the funds that it's earning right now. You're paying a 27 multiple. So you're paying 27 times the price of what it's actually earning, right? In order to in order to kind of gauge a value of what this company is, right? So that's another thing. With the multiple as well, you could look at earning values per EBITDA. You could look at the earnings per sale. Over here, it gives you pretty much an earning per share. So which means if you hold this stock for the last 12 months, which is the TTM, trailing 12 months, each share would have earned you $6.01. So that's one way of you know, trying to figure out what the value of the company is. So financials, the balance sheet. Balance sheet is cool. It kind of gives you a starting point. It gives you kind of like a floor of what the company's actually valued at, an idea of where this company sits. And then you got to go out and then start doing your own thing. Now, here's the point when it comes to the financials of the balance sheet, right? Hedge funds and their analysts, they get the same access to this information, right? Because they can't go to Apple and be like, hey, is there anything else that you disclosed that you didn't disclose that's available to me? And 9 times out of 10, they'll be like, no, this is, well, 9.999% of the time it's going to be no. And because this information is what the company is disclosing, this is here as being public information. Anything else that didn't come from Apple is not public information. And then you get, insider trading and all this different type of wild stuff. But 9 times out of 10, the hedge funds and your analysts, they get the same exact information. Hence the reason why, when I said the quote earlier, we all have access to the information. We just analyze it differently. Now, so why does this even matter, right? Because everyone should have a strategy, and your strategy should consist of the types of company you're investing in, what is the company that you're investing in? So the type of company may be, okay, well, let's just start from a broad perspective, right? We're talking about an energy-based company, a tech company. We're talking about a bio um, pharmaceutical company. We're talking about, retail companies, whatever the case may be. You have to identify what your interest is and what sector industry you believe is best for you. Then you got to go about and start filtering these companies. Are you going to filter this company based on market cap, based on the market capitalization? Market capitalization is one good way to, or the market cap is one good way to kind of gauge, this company, the value of this company, or whether this company is safe or not, because a company with a higher market cap, is a company, that's been in existence, a company that is extremely funded, and 9 times out of 10, you don't have to worry about them going back up anytime soon. Small cap companies, mid cap companies, micro cap companies, and that all so ties on to what your risk tolerance are. Um, you're gonna want to, figure these things out. So all this is part of your strategies, right? And then when you figure out the industry you want to go in and the type of company you want to go in, then you got to start, looking at the various companies and its competitors, right? Um, the companies, well, not the companies that dominate that industry and its competitors, because 9 times out of 10, one of those companies are the companies that you're actually going to invest in. And then when you get that company name, then you start the actual due diligence company. Then you're gonna ask, then to further kind of filter out all these thousands and thousands of companies, you're gonna want to have like parameters, and these parameters may be, okay, the most I'm willing to pay for this is, $10 a share, or $50 a share, or $100 a share, and then you start going into more of that, right? And then that's going to filter out more companies. Then you have a select few, a set companies that meets those criteria. Then you got to figure out, okay, now I got this one company or this group of companies. Now let me look into them and let's figure out what their business models are and what this company does and how they do it and how do they fare in this competitive space or in the marketplace. So then you start going on the Edgars, and then you start putting up the 10Ks and then the 10Qs, and then you go through this stuff, you pull what you need to pull out of here, you put it down in your book, your notepad, or however you want to, gather the information up. You look at the financial health of the company. Is the company going? Is the company financially healthy? If this company has a burn rate, is the company pre-revenue? Is the company even profitable? Because for a while, companies like Spotify didn't really make no money. You know what I'm saying? And it's still, yet it raised billions and billions of dollars, right? And and so they was doing something, right, or some type of competitive edge they had, that's had thousands of investors, give them their investment. You That's something that's up to you. So think of it as you're a hedge fund manager, and you want to enter a particular space, and you want to get the best price possible to enter this space. And 9 times out of 10, how you get to that investment is by performing your due diligence, is by dissecting the company, getting the information that fits your model, and then, confirming that information. And then at that point, then you look for, okay, now let's see, how do I get in there? And then you might deploy some type of strategy using, price action. And that's more on the technical side. That's when you put up the charts and you look at the different price points, you look at area of, consolidation, areas of accumulation, supply and demand, and all those different type of situations. That's I won't say it's the easiest. There's also, another form of, due diligence as well, by looking at the charts and how the charts been performing, looking at patterns and so on and so forth. Then there's the other type of um, checklists, or parameters that might make you want to invest, by looking at the value. Okay, so if we're looking at, if we're looking at companies like Apple, right? So you're looking at companies like Apple right now. It's a PE, price per earning, of 27 times, right? Earnings, right? Am I okay with paying that much right now for this company? Do I wait till it goes down to more? Is it overvalued? Is it undervalued? Does it really have points in the market? What type of market share does it have? So there's a fundamental aspect to it, and there's also a technical aspect to it. But like I said, it all boils down to you. So pretty much, um, like I said, you want the information direct, you go to Edgar, Yahoo Finance, and they pulling all this information you see. All the information you see right here, they're pulling it off of these Edgars. They pulling it off of these filings. Okay, when you see the lady come on CNBC and they're announcing something, they got it from these filings. You can come down to Apple, right? You go back down to Apple, right? You come down here to let's see, news. There's news right here, and this news is what everybody else is coming out with. These different various platforms, syndication, and so on and so forth. But what we really want to go to is press releases. When you go to press releases, uh, right here, okay, this is Apple. It came out on Business Wire. They dropped this. So this information that you see right here, let me check. Apple is part of business to accept contactless payments through the thing. A lot of this stuff, like I said, is coming directly from Apple. See, if you come down here to the credit right here, you see Apple Business Newswire, Apple released this news, right? They released that directly. So any information about the company, you want to go direct to the company to find out that information. I cannot stress that enough, because the thing is whoever gets to decipher this information first and be first to act, they would be in the best position. All right. So right here, there is a 8K, Apple latest 8K. It's a current report. It just came out. It just came out today, right? You want to know what's going on with Apple? Here it is, right? They just said that the departure of certain officers, election directors, appointment of certain officers, and stuff like that. They just brought somebody on. This is amount of shares that's going to be pursued, and so on and so forth and so forth. This is the information. Does it mean anything to you? Who knows? There are people who build strategies just based off of insider activity. Insider activities, aka Form 4s, are pretty much, change of beneficiary ownership within the directors. If you see some type of directors, selling or buying large blocks of stock, maybe you could piggyback of what that might, you know, that move might reflect on the open market the next day or the day of, or whatever the case may be. You know, like I said, it's all based on your strategy and what you deem is, important information or not. So Yahoo is good, Edgar is good. One of my favorite favorite site is FinViz. Um, This is another company, another website that I go on. It's really awesome. You go here, you type in the ticker, the ticker, and what it does, it's pretty much does the same thing Yahoo does, but on a broader scale. And here it is. It gives you all the breakdown. It gives you the index, what it's a part of, S&P 500. They give you the market capitalization, the income, sales, book per share value, cash per share value, dividends. It gives you everything right here. I like this site because a lot of the information that I use for my fundamentals and how I use the fundamentals, I like to just come here, because instead of me going through an entire 8K as far as like the financial data and points and stuff like that, I just pop on over here and I'm able to I just pop over here and I'm able to get this information right here. Shares outstanding, shares in the float, uh, short, how many shares available to be short ratio, target price, so on and so forth. The institution, the insider own, how much the insider own, institution own. 59% of the company is owned by institution. Institution transaction, like all this information here, earnings per share, next quarter, estimates and stuff like that. All this stuff is good. That helps, based on your strategy and what you want to do. But like I said, I keep it real basic. I keep it real simple. When I come into a company, pop on Yahoo, kind of quick overview. If I want to go more, I hop on Edgar, pop in the 10K, 10Q, look at it, see what the company does, how the company's faring, who the competitors are. And sometimes I even go and compare that company versus who the competitors, because you might actually like the competitors better, based on certain fundamentals. And some of the fundamentals might be that, hey, they taking advantage of a particular segment that, your competitors is already dominating and they're not even in that game yet, but they're still in the same industry and they're pretty much doing the same thing. Also, I also look at the book, because there's a saying, um, is a saying, and they said, pretty much they said, one price. I can't remember exactly what the saying goes, but it's something along the lines of, if a company is doing, two companies is actually doing the same thing, their prices and how much you pay for that company shouldn't be like crazy. It shouldn't be a crazy spread. You know what I'm saying? It shouldn't be something that's okay. The company doing the same thing, same market, whatever the case may be. The competitors, one price shouldn't be like $10, and the next one should be like $100. There's something there. And that's what you may need to figure out, if that is one of your motives, or if that is one of your, checklist that you need to, one of your check boxes you need to be checked in order to, for that company to garner an investment out of you. So Finviz, I go to, Edgar, I go to, and that's how I just that's the way I do it. You might do it different. You might see something, that something in here. You might look and say, okay, let's look at the regions. Like if you're in the Caribbean, you might say, well, that's not really, true. In if it's a cellular provider and you're in the Caribbean, you say, oh no, B Mobile dominates, no, DGCell dominates that versus AT&T, and so on and so forth. And these companies may have subsidiaries in these different, regions and whatnot, and you might have a little insight. You might say, hey, let me look into it more and see, okay, how does this company fare? What does this company have to do with such and such and such and such? And you have to put it together. So pretty much, like I said in the beginning, there's no right, no wrong way how to do due diligence. And another thing is, what are you trying to get? What information are you trying to get? If you're trying to get financials, like I said, the best thing to do, visit the 10, go to the 10Q, the 10Q, it, boom, everything is right here. This is directly from the horse's mouth. It is not something that's derived from it. You go right here, you get all the information, raw detail. Um, you want to come over here on FinViz, they can give you a brief synopsis of what it says on that. But if you want to, like I said, if you want to get the information direct, go to the horse's mouth. You can get it there. Other than that, like I said, it's all about creating a plan and getting all the ingredients together so you could go out and execute. So I'm open for any questions. A bad company versus a good company. I all right. I can't tell you what a bad company is, You know what I'm saying? I can't tell you what a bad company is, and I can't tell you what a good company is. Okay. Reason being, I want you guys to just fundamentally just think about this, right? If a company is selling off, right? So let's if a company is selling off, in order for the sale to actually happen, depending on what type of board or exchange is listed on, there has to be a buyer, okay, in order for the transaction to actually happen. So for every seller, there is a buyer. So if the company's selling off, somebody is on the other side buying it up. Now, for those who wants to get into like market makers and so on and so forth, yes, there are market makers on certain boards that companies are traded at, and their job is to make a market. So they buy when no one's buying and selling, when nobody's selling. But here's the thing: there is a limit to how much they can buy. So if a company is literally free falling and it's a bunch of stocks that keep selling, and is this a major sell off? Well, the market makers will stay in there as so long as certain parameters are met. After those parameters have met and been exhausted, then the stock comes to a halt, aka it chips a circuit breaker. And when the circuit breaker happens, it's like, hey, we're pausing trading on this particular stock. You know what I'm saying? But on the other hand, normally when stock are being sold off, it's a sale. And if it's a sale, to make the sale actually happens, somebody has to buy it. So why is someone buying a fallen stock? I have no idea. It's their strategy. But for a company that so okay, Square, what's the thing for Square? That's what? SQ. So let's go to Square. SQ, where is Square? Square. Oh, Square. All right. So Square, right? So let's look at Square. So Square is falling, right? Obviously, because they're falling, when they're falling, like I said, somebody is buying it, right? Who is buying it? We don't know. So let's look at insider trends, actions, pretty much 6 months. A change, 12% minus. So institution owns 62%. Um, institutional transaction, 3% of the transactions are actually being done by institutions. Let's see, income. All right, so let's go to this. Right, so you just told me about Square. I don't own Square. I don't know anything about Square besides Cash App, and that's about it. So once more, here's what I would do. You just told me about Square. Uh, I'll back up. You said SQ, right? SQ block. I'll come here, and then I'll start the process again. I don't know anything about Square. Let's see. They have their statement of acquisition, ownership by things. This G13 right here, this is like the exact something what I was telling you guys about just now. Someone is buying these things, regardless of what. So yes, it might be on a sell off, but somebody's buying it because somebody believes in the stock. Maybe it's a fund, that fund might want to, yes, buy it up, and then for whatever business purposes or whatever their business model is, they might buy it up, only to get voting control to then help, shift the course of the direction of the company. Maybe it's someone who really believe in the stock and say, hey, I'm going to support this company regardless of what. And, we're going to be there for the company, and we're going to help the company stay up. It's so many variables of why someone will buy a company, acquisition. See, all these are pretty much entry set of sales. These 13 G's right here, all this is people buying and people are selling. That's all what these are. So some people do have interest in the company. But anyway, Let's go down to that's the 10Q. Let's look for let me look for companies. Let's look at the quarterly report. All right. So coming down here, Square Inc. All right. So let's see what the company's doing. Is financial balance sheet discussion. So this is a kind of cool idea to kind of not a cool thing. The MD NA right here. If we click onto this right here, right. So this is kind of like I was saying, guys, from inside the directly from the horse's mouth. This is like inside. This is what the executive team, managers of the company. This is what they're telling you what's happening right now with the company. Right. It says you should read the following discussion and analyze in conjunction with the information set forth within the consolidated, the condensed consolidated financial statements and notes and everything. So it's going to be right. So if you're just telling you what's happening, so then there we know there is notes, right? So with the financial statements, right, to make sense of the financial statements, there are normally notes that accompanies the financial statements, and those notes may be permanent information about how they're reporting. So if accounting is using a different type of policy or procedure, or they're changing a procedure, or just pretty much that line item and how they're reporting it is going to give you that note. Is going to give you like a more detailed description of how it's reported, why it's reporting like this, and what should it mean. So they're pretty much saying that, hey, we should read this, right, and say, hey, look at the notes in the consolidated quarter report. So pretty much, here we go. We started in first 29 businesses and sellers. So I'm just thinking this because I don't want to just get so deep into it, but I'm just like trying to pull some information out of here. So this pretty much over here is pretty much telling you what the company does, what they offer, what the different services are. Right here, it says the ecosystem provides financial tools and individuals to start receive payment. Blah, 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 blah. Recently launched to be determined a Bitcoin focused business established to build on an open development platform with the goal of making it easy to create non-custodial information systems and decentralized financial service. So they recently launched, well, not yet, Bitcoin focused business. Who knows what that is? I'm sure it's going to give you more details down here. In August 2021, being a definitive agreement to acquire Afterpay by way of a court-approved scheme of arrangement for a 0.37 share of Class A common stock for each outstanding Afterpay ordinary shares. So there is an acquisition that's going on. Did you know about this acquisition? Just asking. Yeah, they already entered the agreement. The agreement is pretty much done. Um, this is what the amount is. Considered based on the closing price of 290 September, the outstanding shares are actually faced as that same day is going to finally replacement agreement. What is 26 billion is comprised of 11 shares mark price So boom. So they're buying Afterpay, and in exchange for XYZ, they're giving out over 111 million shares of their stock to Afterpay. So of course the stock price is going to drop as well too. But then we got to look at what this entire deal will actually look like post merger, right? So what does Apple what does Afterpay brings to the table? What I know of Afterpay, it's a cool retail situation. Um, Afterpay gives you like a almost like a line of credit to retail. So maybe that might be Square entering a broader, online commerce presence through the acquisition of Afterpay. That might be something that could be beneficial to them versus the peer-to-peer system. They also talks about they want to Square banking to all U.S. sellers running across the financial industry, which includes Square savings. So now they have a depository bank, which completed acquisition of the issue of title. Detailing those 8 acquisitions, we can do things in the financial. Yeah, okay, they bought title, I guess. 2001 reissue. Aggregate principal to doing senior support no conference over from the senior okay. Which goes January 2026. They got some notes due. Um Things like this, like I said, I don't know if it's a bad company. I can't tell you if it's a bad company. I don't know too much of the company, but like I said, if I wanted to find out, this is where I would go to find out because this is where all the pertinent information lies. You understand what I'm saying? To fund some of our PPP loans, we entered into the paycheck firm liquidity for liquidity facility. So they had a PPP. They got a PPP loan as well, apparently. We first agreed in 2 rounds of payment for things, so they took 2 rounds of it of the PPP government and eligible for forgiveness to the borrower first. As a citizen to return, we had a facilitated the issuance of 1.4 billion of loans in aggregate under the program, which we had sold to an investor. Other since a party has been forgiven, of which there were well, yes, some of it. Yes, some of it was forgiven. They raised some money from an investor to pay some off. Uh, they used some money to pay some off. Some of it has been forgiven. See, like, there you go. This is the information. What does that mean to you? I don't know. You know what I'm saying? You got to figure out what it means. So, yes, the company is on a sell-off, but it's a sell-off for it could be various reasons. Like this Afterpay acquisition is 111 million shares. Let's see how many shares they have outstanding. Okay, 111 million shares. Shares outstanding. Look at this. A quarter of all the stock that's been issued, right? A quarter of all the stock that's been issued thus far, out of the 462 million shares, 111 of it is going to be transferred to Afterpay for them to get this acquisition. Like I said, I don't know what this Afterpay situation will look like post merger, but we just know thus far a quarter of all the stock they got is going towards the acquisition of this company. Now, that company might boost sales, bring an additional, $5-6 billion on the sales. Once more, to get an idea of what that might look like, let's go back. We want to go back. Where was that? Where was that? Where was it? Where was it? Where was it? Where was it? It was. Uh, where was it? Here it is. In August 1st, 2021. So let's go back to August 1st. They made it thing August 1st. So let's go back to August 1st. Here it is. Here it is. It's the second. Here it is. Enter to definitive agreement. We can click right here and actually get the report. And let's see what it does. We come back here, enter the definitive agreement on August the 1st, consider the Australian company, Square, the acquirer, as the thing. Here it is, after pay. This is the actual agreement. So now you can go into it and you can see exactly what it would look like. Um, Treatment of this, termination fees, blah 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 blah. Additional information for going to description of transaction, regulation, release. You can read this thing and actually kind of figure out like what's gonna happen right after. You know, exactly. Mm-hmm. Right. And this is why, like I said, fundamentals is why technical is house. Like you have to figure out why is this happening. So for Square, I could just chop it up and say just based on what I've learned, what I've read so far. I've never seen this information before. I'm not a Square guy anyway. Um, that's funny, right? What I've seen so far, just based on some of my knickknacks, is like, yo, if I'm doing a stock transaction and I'm selling a quarter of my stock for this one acquisition, my stock will take a hit. There's no as if buts about it. Now, let me ask you this question. Out of the 62% ownership of this company are institutions. Who knows if one of these institutions agrees with that transaction? They may not want to be in that transaction. They may like, yo, okay, I like Square for what Square is. I didn't agree with the business model, so I'm gonna sell off and I'm gonna liquidate the position because I don't believe in the afterpay mechanism and you taking a quarter of your entire cap to give to this company to enter this new space that I don't agree with. So that institution is gonna want to, liquidate and come get out the position. But one thing about these institutions, they're not just, even though they may not agree with it, they're not, especially the hedge funds. When you see an institution that owns majority ownership of the company, you have to start thinking like an institution in order to kind of gauge what the institution would do. Because an institution is not just going to divest just immediately and just like, whatever, I'm taking all my money out, one big trade, and come out. Because that 62% may equates to about over 200 and something million shares. Out of that 200 and something million shares, who knows what that one institution owns out of that 200 something million shares. So if we just do the basic math, right, there's 400 million shares outstanding. 1.1 of it already went is already going to the afterpay, right? Dilution is going to come into play. Number two, um, number two, if that's happening, over 250, 60, 70 million shares out of the four, it's directed to insiders. Those insiders individually, God knows what each one of them holds, and if they don't agree with the merger, they can start liquidating. So cap that with that dilution. Um, One institution don't like it, wants to liquidate. That's a sell off. And then you got to also put in consideration, just right under here. I mean, they're still getting upgrades. You know what I'm saying? Bank of America Securities on February 11th give them upgrade. It's a neutral. It's a buy. You know what I'm saying? Look at this one. This is BOA again. You know, it's underperformed. It's a neutral. You know, they still getting good, ratings and whatever the case may be. But at the end of the day, like I said, you have to have an idea. You have to have a strategy and see what that's and you gotta have that strategy. And to deem a company a bad company. Now, if the company, you want to know when a company is deemed like is really crap and is really bad. Once that company filed for Chapter 11, you know what I'm saying? Once that company filed for Chapter 11, you better be holding on to preferred stock. You know what I'm saying? That's when the company is like crap. It's bad. The stock price, the stock price of a company, it's a good representation as to how the market reacts to the company, because the stock price of the company may be down, but the book value on the asset the company may have may remain the same. Now, if there's a major change in the book value of the company, well, then you know what? Yeah, that might be a telltale sign that the company's something's going on. If the company's liability start eating away, at all the assets, and the liability becomes more than the assets, then that might give you another heads up, like, oh, hold on, wait a minute, let's really look into it. You know what I'm saying? If the company's bleeding bad, or have a crazy burn rate, then you got to figure out, why is this company having a crazy burn rate? Like, for instance, here's something that is widely misrepresented, and yet still it's a decent company. It's what do you call it? ARC. You know, ARC. I'm sure you guys heard of ARC before, right? It's an ETF. What's the name? Kathy Woods. Uh, look at that company. Their holdings are incredible holdings. Um, let's look at art. Let's look at art. Some people may deem art a bad company. Some people may deem art, it's a this and it's that. But if you look at the company and look what the company has in its portfolio, you can actually kind of figure out. You can look in the company. You can kind of figure out. Hey, I know the company has like has test got Tesla in it. They're exposed to a lot of tech company. You know what I'm saying? And some people don't believe in art. Some people think art is really bad. And there's nothing wrong with. I mean, to me, it's like, what's the thing? How the market is how the market, is looking at the company, stock price. You know what I'm saying? But anyone who's holding Tesla and is a major holder of Tesla, to me personally, I don't believe that's a bad company, because Tesla is a great company. It's a trailblazer. It's dominating the EV market space while everybody's still playing catch up. And when Tesla does figure out their production situation, all their gigafactories, all this stuff is online, and they're able to start delivering like they plan, and that's always been kind of their downfall, was their deliveries. Now they addressed that situation. You know what I'm saying? The product is still a tier one product. Um, they're making this stuff more affordable. They deployed, capital and resources in R&D and development, as to fulfilling those orders and taking care of some of their problems. and it's been working. You hear what I'm saying? And ARK has a huge holdings of Tesla. So I won't say that it's a bad company, but whatever else Miss Woods doing and whatever she got going on and how the market is receiving it, but then that's something different. Hey, listen, the market, the market is kind of is unbiased. If they like it, they like it. Don't like it. I mean, just look before this war was going on, it was crazy, And the market doesn't like uncertainties. Right before the brink of, before Russia was about to invade Ukraine, the market was going crazy. Now Russia invaded Ukraine, and the market is like, okay, well, here we are. This is what we're doing, And how do we react to that? It all depends on you. My biggest thing right now, I'm in energy. I love energy. I've always been in energy. So now I'm fair and decent because I've been in energy, know what energy is. I've participated in that sector, so I know what it holds, and I know the value of it. What's happening now? You know what I'm saying? So energy sector is up right now. As bad as global geopolitical events and all the stuff that's going on, someone who strategy had staples and energies and so on and so forth, they're up right now. And is it bad that they're profiting off of war and all these other things that's happening right now where everybody's screaming? Um, it's hard to say that because when after Biden passed this infrastructure bill and he put EVs on a map, energy was down. You know what I'm saying? It was like $30-some the barrel the other day. You know what I'm saying? And then was that bad? Was that good? Who knows? To each his own. So that's what I got to say about that situation. But there's no such thing as a bad company or good company just standing from on the sidelines because I can't judge that or gauge that. That's totally up to you and your preferences as far as the company goes.
Hey, Deshorn, can we look at? I think Lori had said Nicola just to see.
What's Nicola? What's that's the trucks thing, right? Okay, yeah, they had like a major lawsuit or something like that. It was like fraud for like a 18 mil or something like that, right? Yeah, here we go again. Nicola, we're gonna exit all this crap, and then we're gonna go back here, and then we're gonna go to the company's file. Same thing. I'll do the same thing over and over again. Well, they got a prospectus, first thing first, so that means they're about to raise a bunch of money somehow. So they're offering 18 million shares. All right, so that's the first thing I see. So first thing I see, they about to go on a major raise for 18 million shares. Let's see what they're raising the money for. Okay, raising the money. So let's do the same thing. Let's go to the business. What do they do? Our vision is to be zero emission transportation. HDD, we plan on wheels and the vision through the word transformership, groundbreaking, such and such and such. We begin with achieve versa, table of contents, market sector. So this is the industry that they're going into. Apparently, a $600 billion a year industry, steady growth. I guess this is for the markets. All right, so they targeting looks like private fleet. So they're looking to trucking companies, over the road, short haul, long haul trucking companies. Yeah, and this is the company that had like a semi truck electric semi truck, right? And it was like a flop or something like that. Or just sorry. All right, let's go into it. Let's go into it. Let's look into it. I want to first let me kill my card and try thing. These are some of the companies they're looking to potentially partner with. I'm guessing. Um, in addition to consumer innovation demand, corporations can actually use their financials and article. So yeah, so I'm guessing they'll be targeting some of these companies as far as the commercial side goes. Policy trends, California. So this is also based, not stuff based on what they're doing. Hydrogen delivery sometimes momentum with a global. Similar. Only question is all right, so a lot of this is just more so the company, the industry, where the company's at, landscape, how they plan on addressing the companies. This is their competitors, so Tesla, Daimler, that's the Mercedes Freightliner company, Volvo as well, over the motorcycle manufacturer, for announced their plan on bringing in vehicles. So this is where the competitions are. Obviously, Tesla and their semi truck is going to do it anyway because they're more further developed. Competition due to higher barrier of entries and referring to promotion. Say again? Well, let's see. As a part of the residential sector, it's always there contributing and offer solution by offering both. It's a battery. This one is hydrogen and one is battery. So there's two products they're putting out. This is the battery electric and this is the um, fuel cell version. So they got two versions that they're bringing onto the market. Uh, this is cell phone. This is the battery. So it's two products they bring into market. Apparently, this is what he's looking at. So yeah, this is more so the product of what they're doing. Hydrogen propulsions, procurement. This is how they're going to get it. That's how they're going to get it. That's distribution, so on and so forth. All right. All right. So that's what that is. Business. Okay, let's go to risk factor. Risk factor related. We are in an early stage of the company with a history of, see, they said it outright. Real estate company with a history of losses and expect to incur significant expenses and continuing losses for the foreseeable future. That just tells you what it is right there. We recurs net losses of 690 million and 370 million for the US ended in there, respectively, and have a deficit of 1.4 billion from inception. The only corporation on the next thing looking reference to merger continue to operate that was this part of the until at least it's on they start delivery of their truck, which is not expected to begin at least to the second quarter of 2022. So and guys, let this be a testament of why going to the horse's mouth is a lot where it's not thing because the SEC holds issuing companies to like a crazy ridiculous standard of you have to tell it all and you have to tell it all as it is. They straight up just said, yo, we incurred a crap ton of losses. We're going to continue having a crap ton of losses, but the difference is between this company and that of the company. Between this company and another company, maybe this could be a comparison, a comparable, right? Well, not really comparable, but here's what it is: new companies and early stage companies, they do spend and burn a lot of money doing R&D, research and development. If this is a new company targeting a new particular sector, a new particular segment, which it clearly states it is, it's going to have a ridiculous burn rate. And because they have to do a bunch of testing, bunch of licenses, bunch of legality stuff, and all this stuff costs money. They got to get approval and the different various jurisdictions that they're conducting business in, that they're conducting research in. They have to build stuff and break it to figure out what is wrong with it or how to make it better. So early stage companies and stuff like this, and this was a great example, Lori. Thank you for this. Companies like this, they are expected to do these things. They're expected to have a ridiculous burn rate. They're expected to lose money and be what they call pre-revenue. This company is obviously pre-revenue, so therefore is not that much to expect as far as balance sheet. So if you go look at the balance sheet of this company, or you go look at this company and how it's performing financially, you can't really you can't really expect the company to like have like a ridiculous good stable balance sheet. You know, that's not that's just not gonna happen at all. You know, sales $0 in sales. You get what I'm saying? Book value for shares dollar like what 1 to 77. Market cap they raised what $2 billion so far. Income, like they said, they lost over 600 some thousand, and that should be stipulated over. I read that somewhere around here where they see 600 losses of 670 million and an additional three for the year end December 31st, 2021 and 2020. So see, there you go. It's telling you right there. Um, the number's a little bit off, but that's why you go directly to the horse's mouth, right? They tell you how much money it's losing, zero sales. What are you expecting in this company to happen? Institution owns 27% of it, and that is normal. Institutions are not really known to hop on early stage pre-revenue companies. They're not. You know what I'm saying? They're not going to do that. So a lot of this stuff, it looks like it's insider owned is only a little bit, but the rest is probably some VC venture capital people that probably owns majority of the stock because there's a big gap between 0 and 27. So VCs and other people that are investing in the company. Expect the rate at which we will incur losses significantly higher in the future. Period. As they got to design and develop our trucks. These is all the stuff they're saying. Equipment built. They are telling you what the risks are. So once more, you cannot sit here and say, "Oh, Nicola, it's a bad company." Now, I've heard the rumors of personally I've heard the rumors of legal proceedings, and here it is. If we go down to legal proceedings, we should see what the legal proceedings are. For the description of a material legal proceeding, see legal proceeding note 14 in the commitments and contingencies from this final statements and also in the good estimates. So I've heard about their situation, um, legal situations. As of February 2020, there were 96 holders of record of common stock, 12 records of private warrants. This number exclude holders whose stock or warrants is held in street name um, by brokers and so on and so forth. So they said for the legal proceedings and stuff, we're gonna go look at note 14. So if we go here, let's go look at the notes in 14. Here it is, notes. Here we go. So here's the notes. This is the consolidation. This is the balance sheet and stuff. There's always normally preceding notes about it, and these notes would also tell you what is happening. Funding, risks, and ongoing concerns. It'll tell you that. Use estimates and information. Purpose. Especially been restricted. So on and so forth. Some policies. It's not price. Continue. It's gonna pretty much come here and it's gonna tell you all your legal matters that's happening. Once we get to it. Oh, this is interesting. Related party, related parties transaction. In 2019, the company entered into an aircraft charter arrangement with the company's former executive chairman of the board. The company's see, former chief information to reimburse him for the flight hours and his personal aircraft. Okay, I guess that was just an interesting read. But you see related parties, that's pretty much like insiders information, not insider information, but it's insiders um detailed description of things that the insiders are doing. It says related party, that means somebody is doing something inside. It's not bad, it's just you gotta if the company okay, like this, like the jet charter situation. So one of the chairmen had a private jet, the company agreed to lease it from him, I guess, or reimburse him for the time that the company uses his personal plane, I guess. So that's what those situations are. But like I said, you'll find everything right here, which is good. If you really want, if you care about the company enough, and you really want to get some type of idea of what the company really, what's going on, this is where you're going to find it. I think it was note 14. Let me look for it. Note 14 times 7.8. That's oh, I think I passed it. No, 14. All right, legal proceedings. Here it is. The company is subject to legal regulatory action arise from time to time. The assessment As to whether the loss is probable or originally caused by blah, blah. In 2016, a short seller reported a certain aspect of the company's business operation. The companies and its board of directors are retained capability to conduct an internal review of things. It's an article probably contacted the division of Fossil Use Security and Exchange, and they were aware of constitutionary fee. The company specifically learned that the staff of the Division of Enforcement has recently opened an investigation in the same of the company, and five of its officers in the recovery received subpoenas from the staff. All right, so here are all the legal proceedings of what's happening in the company. So like, I've heard rumors. If I wanted to validate the rumors, I will come here and I will get it front and center, bada boom, bada bang. Okay, that's just like I was saying, just because I heard rumors, this is how I've come and validate rumors. Now, outside of all that, let's go to the prospectus. Back to the prospectus. They're about to raise a bunch of money. I don't know how much money it is that they're gonna raise. It's gonna tell me somewhere around here what the dollar amount is. It's gonna be somewhere around here. Back up some. Let's check this one. It's gonna, like I said, it's gonna be in here with the use of proceed is. Say again? No, it's not going to be a financial statement. Normally, it would be like a lot of those things that like it was just in magnets. So it would be normally be like right on the top. They'll tell you what it is. So maybe I might find it over here. This one. Yeah, but it's so I guess there are. Let me decipher it to this real quick. Let me see. Let me see if they got different classes of shares available. Nope, there's only one common stock right here. Mm, it's gonna be in here. I think just gotta take my time and look through it. But it's gonna tell you what the use of proceeds are. But normally when you see like prospectus and stuff like that, this is a raise. This is what they're gonna do, and this is the money that they're about to raise right now. Pretty much the prospectus is like the offering statement, and the offering statements is pretty much everything that's in here. How much money they're raising, why they're raising it. I know it's somewhere in here. I'm just not taking my time to actually read through it, but it's in here somewhere. And where you seen it somewhere? I'm sure it's somewhere around here. I'm sure it's somewhere around here. It probably is. Who knows? But it's in here for sure. How much money they raising? Why they raising the money? How they plan on using the money that they're gonna raise? It's gonna tell you all everything you need to know about the business, legal proceedings, the risk factors, and all this good stuff. And then after you do all that, you make a decision whether this is worth your investment or not. Me personally, I mean, I like Tesla. That's my company. um, Tesla competitor like this company, who is probably the only other competitor in that particular segment. See, Tesla has a broad range of products, right? So this is what I was saying, how based on your due diligence, you can actually compare one and the other, right? And figure out which one might be, deemed your investment, right? So Tesla has a broad band of products, and they got their cars and the SUVs and stuff like that. But then they also have that, class 8 heavy duty, highway 18-wheeler situation. Here's another company that core business model is this 18-wheeler situation. That's what they're making. That's what they're doing. They have proprietary technology similar to Tesla, and it's a good comparison, right? So if I were a huge Tesla fan, I would buy Tesla. And then if I'm skeptical of Tesla and Tesla performance, because they have yet also, Tesla is also pre-sale as far as the development of that particular segment of vehicles, I would hedge that against nickel. So I'm going to have major holdings in Tesla, and as a hedge, I might buy Nikola just because. You know what I'm saying? Because it fits my model. I want to invest in green renewable energy and companies and you know what I'm saying? All these different things. And there you go. Reading through these statements and these filings, you know, can make me come to that conclusion. Who knows? But that's what it is. You know? So yeah. So that's pretty much what that is. But yeah, if you guys gonna do due diligence, like I said, go directly from the horse's mouth. Reading articles and stuff like that is good. Reading news articles is good. But a lot of the information that's on those news articles and those reports and those watch lists and stuff, somebody's reading these filings and gathering this information. You want to, for your personal benefit and stuff, you want to go. Go ahead. Banks. So financials. So financial companies, I preferably I use like multiples. Reason being, because if I'm using like a value based model, that's not really gonna work. Because the cash flow and stuff like that, I can't really use an asset based model, because if they post they got $11 billion on the books, that $11 billion, 9 billion of it might be, just deposits, so that's kind of skewed. So I'll look at like earnings per share. I'll look at, earnings per share, earnings per EBITDA, taxes and stuff like that. Book value, price per book value, and that's how can I identify how this bank is going, because banking and those financial companies, they're also kind of like closely guarded as far as what they can and can't do. The trick, not really a trick, but one way how they can kind of get a heads up, which is not bad and it's not good, but their biggest thing is how they report and the different various line items and what rules and procedures are they using to report those particular situations. So I would go through via their fair market value, their fair value. I'll go through like use like a multiple, a ratio per se, and there's thousands and hundreds and different types of way you can get to that. Um, earnings, price per earnings, price per book, EV earning value versus EBITDA, and so on and so forth. There's so many different ways you can do it, but me personally, I just stick to the basics. Earnings ratio, pretty much how much I'm willing to do. I look at the assets. I look at the company, if the company is paying good dividends. Some of the assets, I like to see how it compares to other financial institutions in that particular space. and how what do they do with their money? Are they heavy on treasury notes? Are they buying a lot of these notes? And with the rates, the way the rates are right now, how are they dealing with the outflows and so on and so forth? So I like financials as well. Energy and financials, those are my things. I spend a lot more time with those sectors and those particular stocks and stuff because that's how my portfolio is pretty much built off of. So that requires a little bit more hands-on approach. But for the most part, I just use mostly ratios from financial companies. Still look at your 10Ks, 8Ks, Qs, and so on and so forth because they might have various programs that they're rolling out for particular regions and stuff like that. So yeah, if that answered the question, I hope it. Yeah, I mean, yeah, it's no, like I said, it's no right or wrong way to doing due diligence, guys. There is not. It all depends on your criterias and your objectives. You guys have to set those parameters, and that's what it is. How I do it is going to be different for how you do it. But I just wanted to show you guys like one of the main resources, which is Edgar, and going through those filing. There's no shortcut to it. You just have to plan it and then go out there and get it and validate everything. So if you want this and it can't validate that, but then you know what? Then you know, okay, this may not work. Then let me look at something else. Um, I believe everyone should come up with a set of rules, a set of criterias, and if the stock meet those rules and those criterias, then you should then you know start looking to, okay, how do I get involved or how do I get into this? Um, but other than that, like I said, there's no right or wrong way of doing it. It's just what you need to get, what information you need to get. And like I said, Edgar is the number one tool. That's directly from the horse's mouth. And they have to admit to you, hey, if it's bad, the good, the bad, and the ugly. And they have to say as pure as day. Like Nikolai said, like, yo, we've lost $600 million and we're going to continue to lose a crap ton of money until we start selling these trucks that we're currently making, and we need more money so we can continue to make these trucks and continue to test them and burn more money so we can get more money, so then we can sell, and then everyone is happy. So I'll leave you guys with that. So just my thing is just start. You guys just start somewhere and start at Edgar. Start with looking at the filings. All right. Well, that's all the questions. I'll leave you guys. Let you guys be.
Thank you.
Thank you.
Thank you.
Good night, Lori. Thanks.